Hello and welcome to this new episode of Bootstrapping Your Dreams Show. I'm your host Manuj Aggarwal, and today we'll be talking with Yael Tamar. So Yael is the CMO and Partner at SolidBlock, which is a new fundraising vehicle offering a compliant global platform for the issuance and trade of digital securities backed by real estate and other assets. So Yael is a financial strategist, speaker, advisor, mentor with over a decade of experience. She's a regional co-chair of FIBREE, the Foundation of International Blockchain and Real Estate Expertise. Yael has over a decade of experience as a marketing executive within the fintech, finance, telecom, and energy industries, as well as a long track record as an entrepreneur. Let's welcome Yael.
Thanks, Manuj.
Thank you
for
so much.
having me.
Thank you so much for being with us. So excited to hear about your story. So why don't we start there? Can you tell us how you started, how you got into this industry? How have you been able to achieve so much in such a little time?
Well, thank you. So let's start with the end. Blockchain industry is an emerging industry. It's and like any emerging industry, it has a lot of opportunities for growth for anybody who's jumping on board, who's trusting that the industry is going to grow, has an opportunity to rise to the top. So I quickly identified, when I entered blockchain, I realized, I was really lucky. I entered the industry because I understood its potential. I never really got into crypto so much, cryptocurrencies, but I've seen Bitcoin since maybe 2013 when I first noticed Bitcoin. I didn't get so excited about crypto, but then I started hearing, I was in the fintech industry. I had a startup at the time in the Silicon Valley working on a fintech application, and everybody started asking, why aren't you using blockchain? Why aren't you using blockchain? Even without understanding what it is, but it seemed like a good fit for them. So then I looked it up and I got really excited by the possibilities that it offered to many, many applications. And I started, consulting and learning. I helped governments and banks and doing really, really interesting applications until, the entrepreneur bug caught up with me and I wanted to realize my dream as an entrepreneur. And I started thinking, okay, so what is something that a challenge that I really want to solve? And at the time I started looking into investments and how can I invest in different securities and real estate and things like that. And I realized, it's severely limited. I don't have access to any good investments or to very few also as a non-sophisticated investor at the time. I don't have access even, to really interesting real estate projects, not as, a big company would, a big investment company would.
Yeah.
And so I thought, blockchain can help us solve it. Why not? And so I started looking into how to do this. And then I looked into who's done this before, who's kind of broken down real estate into smaller parts, enabling people to buy it and transact as you would transact other assets in the digital form. And then it appeared that a fellow Israeli did a project in Aspen, Colorado, did a technical platform. And so I got matched with him by a friend of mine, and who introduced us, and we became partners, and I joined the company that's called SolidBlock. And I've been running with it ever since. But in terms of blockchain and how I got into the space and how I got to kind of become an influencer in the industry, it's just basically taking opportunities, working 24/6. I don't work on Saturdays, so it's 24/6. Going I don't know to how many, maybe 30 different conferences, speaking, over the last year, twice a month, I think I was speaking at a different conference, maybe even 3 times a month. And, meeting all these people who are elevating the industry. So it's really a lot of fun.
Awesome. That's a great story. One thing I recognize here is that, having an open mind is a big part of especially when we're talking about disruptive technology, new technology. So if we keep an open mind and we hear good things from different people, I think it's a good thing to dive in as you did. But a lot of people sort of, they ignore it and they say, I'll just continue doing what I have been doing for the last 20 years. And and we hear stories like Kodak and all that. Yeah.
Well, people are risk averse. In general, there's three things that kind of are part of our human nature that prevent us from realizing our dreams. And one of them is fear of the unknown. And it's true, humans are not programmed to go and seek out danger. You know, we run away from danger, right? So that's number one. Number two is the herd behavior, right? So we look into we're a social animal, so we look into what other people are doing, even if it's not working for them. And we do the same. And then finally, you know, it's basically overthinking it, you know, and not realizing that they'll turn, you know, what's the worst thing that could happen, right? So we tend to overestimate risk. So it's not only that we run away from danger, we're also risk averse, and we tend to overstate the risk related to activities. So that's why, you know, there's so few people in the world that get to be rich or self-fulfilled and so on, is because we don't take the risk.
Yeah, no, that's so true. Now, speaking of risk, you know, blockchain has it's a fascinating technology, and I have worked on it and had a lot of fun. But when I talk to a lot of people, even in the tech industry, even people working on the blockchain projects, I found there is a lot of confusion around what this technology is all about. What is the actual impact of this on the way that we live, that we do business? So, what is your take on what this technology means for human race?
Okay, let's just start from the beginning. What is blockchain?
Yeah.
So let's say how it all started, right? So the most famous use case and the first use case of blockchain is Bitcoin, and everybody has heard of Bitcoin. And the interesting thing about Bitcoin is that you can transfer it peer-to-peer without any decentralized authority, right? When Bitcoin was legal in India, I used to pay my Indian team with Bitcoin. It was super convenient and it was free. You know, and now, you know, when it became illegal, I have to give 10% to PayPal or bank or MoneyGram or whatever. You know, just think about how this money could go to my team, right? I could use that to pay for more work. So how is Bitcoin possible? How is a crypto money possible at all? Well, if I want to give you, Manuj, $10, I want to pay you $10. I can either take a flight and go give you $10 in cash, right? Put in your pocket. I could PayPal it to you, in which case PayPal will subtract $10 from my account, add $10 to your account, and the same thing will happen to a bank transfer, right? We need some sort of authority that will make sure that my balance is reduced, your balance is increased. Now, how can we do this? And if there is no central authority? Well, blockchain is a network of computers or software parts all around the world, which will automatically vet the transactions. It will look into the sender, myself, it will look into the receiver, yourself, and it will update the balance automatically based on the consensus of the network that this transaction is legit. Why will it be legit? Well, they have to check that I actually have the funds, and you know, and they have to check that you are an actual person, I'm an actual, you know, person or an account, right? So that's all it is in terms of a transfer. Now that has kind of run for a while, and you know, for a few years after Bitcoin was invented in 2010, and then people kind of realized, wait a second, this is a really secure, immute, you know, a way to transfer other things, information, you know, beyond payments. There's other applications of blockchain where you can facilitate transactions where kind of you don't need to trust an authority, right? Trustless transactions, or even more efficient transactions, faster transactions of that nature. So it started to get used in other places, for example, in the supply chain, where you know, in general, when you send a package from India to Israel, it will likely go through 15 different ports, and every single, you know, 15 different transportation types. At every single point, it will need to be scanned and rescanned, and different documents will have to be faxed or scanned or emailed. It's pretty crazy. So, you know, Maersk and Maersk and IBM have been able to put together a pilot where they use blockchain to kind of update all the parts of the ecosystem where a package is located at any different time, you know, transferring information via blockchain. automatically executing smart contracts as well with automatic payments as soon as the package is delivered from one place to another. So you kind of save a lot of overhead. Then Walmart and Unilever and a bunch of other big FMCG giants got together and they said, we're sick of food poisoning. It, sickens 10% of US population, kills a lot of people, even like 3 million people a year from food poisoning. It's crazy. So they said, we're going to use blockchain to identify the products that have been poisoned with listeria or some other salmonella and so on, and then we'll be able to pinpoint exactly the origin of that product. It's a specific container, it's a specific route, so we're going to take all those things off the shelves. So this is some examples of blockchain, right? So, and in real estate, people realized it's a liquid product. It's a product that people don't trade. What is that? It's an asset class that's huge. It's around $300 trillion all over the world, and obviously not all of it is meant to be liquid. Somebody's apartment or a garage or land in middle of Zimbabwe may not necessarily be tradable, but there are a few things that are, like big apartment, residential, commercial, yielding real estate, shopping malls are all bases, are all, money generating products, which means that it's perfect for trade, and yet it's not traded. It's not accessible for investment except for select few investment companies that identify the potential. So we said, we believe that this is the industry that's ripe for disruption, and we can go in, we can turn this illiquid product into a tradable financial product. It has all the attributes of a financial product, which means it can be broken down in parts, it can be traded, it can be evaluated easily by supply and demand, right? So we're in it now.
Cool, that's great. So the projects that you talked about with Merck's and the food, is it the Trade Lens network and the food? I forget. It's with IBM, yeah.
Yeah. A lot of these projects were pilots of IBM and Ernst & Young.
Okay, cool. Yeah, I worked on similar project for the mining industry, interestingly.
Cool.
Yeah. All right. Okay, so one thing I really want to dig a little bit deeper is this elimination of third-party reliance on third-party trust, because never in the history of humanity, like, we were able to transact without a mutual trust or a third party to trust, right? So right. Blockchain enables us to transact with each other without establishing prior mutual interest. So how big is that? Like, I mean, from what I can see, that can actually eliminate a huge number of institutions that we have set up for a specific purpose of maintaining some sort of a trust in the system.
Right. So I don't know. This is a very tricky question because I think it's going to take a lot of time because people have to develop trust in blockchain and trustless systems, which is paradoxical. I think people don't like banks in general. They have way too much power. People are not crazy about governments. And people are not crazy about big institutions, especially millennials are definitely mistrustful of big institutions. Whether we can live without them, I don't think that they will disappear. Although, a funny thing that the Prime Minister of Israel, Bibi Netanyahu, a few years ago said, that it seems like that banks will disappear. Whether Bitcoin is the one that's going to destroy is not sure, but so this is crazy, right? The Prime Minister of a country is saying such a thing. It would probably cause a huge uproar coming in, being in America or somewhere in Europe, but in Israel didn't really raise anyone's eyebrows. But on the other hand, in Israel also, the Supreme Court has ordered a bank to work with a company that has been dealing with blockchain and crypto, right? So they said that the fact that they closed their account was illegal. Right. So that's another interesting thing. So basically the trustless systems, I don't know how long it will take to get there, but even the financial system and the big institution system has been transforming, right? So the banks no longer have this huge foothold in the society because you have smaller financial institutions that are fulfilling the traditional roles of the bank. like a peer-to-peer lending networks,
Yeah.
like smaller, community type of banks and arrangements, mobile banking, and so on. That also in America, especially some smaller financial institutions are able to get licenses fairly easily, and fulfill a lot of the functions of a bank. So as far as the government is concerned, I mean, in Israel, we've been living without a government now for I don't know how long, and we keep doing elections over and over again. And I wish there was an alternative. I think specifically in our situation where we're so depending on defense, it's very difficult. But I think in some countries like the Virgin Islands, there've been some Marshall Islands, I don't know where, there've been some talk of doing like a virtual government. I think Lithuania has really advanced in this. And I really am excited to see what's going to happen.
Awesome. So yeah, I mean, I just want to emphasize the fact that a lot of people think blockchain and it's Bitcoin, but it actually is a technology that can actually change a lot in our lives. Now, let's talk a little bit. Let's go a little bit deeper. Maybe this is the geeky side of me coming out, but blockchain is based on this encryption technology, which is fairly mature. But then right around the corner, we have things like quantum computing coming up. So there are a lot of there's a lot of talk about even today, blockchain is not very stable. We have all kinds of forks going on in the main blockchains, and we have private, public blockchain, and it's evolving technology. But once quantum computing comes into the picture, a lot of the safeguards that are around blockchain, they may actually break down. So what do you see? Do you see that being a problem, or how do we tackle that?
So let's think about the internet, for example, right? When it came out, it gave so much opportunity to businesses, to individuals, it penetrated every single thing that we do. And then, of course, things came out to security issues and other problems that we're dealing with. Why? Because the community came around and identified an opportunity, business opportunity, right? If they're hackers, then there's antivirus and other systems that are protecting people. So it's all about measures and countermeasures. So I think the same thing will probably happen with blockchain. It is already happening with blockchain. In terms of the security, it's very interesting. I think that we cannot blindly trust any system, and there always have to be backups. So for our system, for example, when we're putting real estate on blockchain, putting any project on blockchain, and ownership is on blockchain. However, there are other security measures in place which state that before I can purchase any part of any asset, I as an individual have to go through bank grade security checks. I have to go through KYC, your customer, I have to go through AML. And sometimes I also have to prove that my income level is of a certain amount as an accredited investor. And I have to also do this within regulation. I have to comply with all the regulations. And of course, we as SolidBlock have to ensure all the compliance. So that means that I cannot even sell my shares. I can technically sell my shares to anyone who's an accredited investor, or in some cases non-accredited investor, but the other person who's buying the shares have to undergo again KYC and AML, which also means that any hacker in the system who will say, go and take ownership of my shares, is not, it's all reversible because they haven't undergone KYC and AML. So I can always get my shares back. So it's not a decentralized system in a way. We can't make it a decentralized system. It's on a decentralized platform, which means that your ownership can be proven because it's out there and it's public, right? It's shown that you've purchased shares, and that's why, by the way, we want to use public blockchains only for the shareholding component. We can use proprietary blockchains for other things that we do in the system, but we use public blockchain for the smart contract for the ownership.
Cool. And I know that your expertise is blockchain, but when I talk to technologists who think about the future, I always come to this conversation about we are living in a very interesting time where a lot of key technologies are coming up. So blockchain being one, deep learning and AI being one, cloud computing, IoT, and to my knowledge, we've had really revolutionary technologies come up like the PC and the internet, but they came out at a different times and stages. But right now, like a lot of these very very cool technologies are coming together at the same time. So do you see it that way as well, or like do you see that this is some sort of a special precursor to something really disruptive when we combine all these technologies in the next decade or so?
I think it's always about the combination, right? The internet by itself is not interesting, but the internet and business, or the internet and security, or the internet and IoT. IoT could not really exist if you couldn't, transfer information and do something with the information you get from the sensors, right? They have to talk to each other. So, and by the way, the internet was like the beginning, right? So blockchain is definitely the beginning of another era of technologies and applications. And IoT and blockchain is a great combo. Also AI and blockchain. Blockchain can put AI on steroids, and blockchain can definitely help secure the information that's received from IoT devices, and it can also give permissions, right? Blockchain is a great system to provide permissioned access to proprietary information, and it's all about data, right? It's all about data security, data sharing, data appropriation, and so on. So it's all about the data now, seems like.
Yeah.
So it seems like, I don't know if all of these technologies are going to be combined, but definitely there is symbiotic relationship between all of them. And blockchain is like an enabling layer, basically, for many of these technologies.
Awesome. And now let me flip the switch here, because again, in the technology circle, sometimes people fall into this trap of when they find a good thing, they just want to keep using it for everything. So can you tell us what are some of the use cases where blockchain may not be the right thing to use?
Right. So number one, the Long Island iced tea that renamed itself into a blockchain, I don't know what. Long Island blockchain company probably is, you shouldn't be really using blockchain for tea, unless maybe you're tracking the provenance of the tea leaves, like where they came from, ensuring, there's not some kid age 6 that's working on a plantation. So that could be a use case. But otherwise, I think blockchain right now is a relatively expensive technology, and where it does not need it, I don't think anybody's really using blockchain where it's not needed, because it's also hard to understand. I'll tell you for sure, in 2018 and maybe beginning of 2019, a lot of companies have been running what's called an ICO, initial coin offering. So they were trying to insert utility tokens, which is basically a blockchain application, kind of crypto application, a token that was kind of like crowdfunding, but not giving people equity, rather giving them the promise of a future revenue or some sort of a product. And that did not materialize in any way, shape, or form. And there were a lot of applications that did not require any blockchain whatsoever, and any use of crypto whatsoever, but it was done for fundraising / scamming purposes. So any bank, any major bank right now is using blockchain, of course, for payments, right? So for payments, it's almost a no-brainer. The blockchain and crypto systems are, especially in situations where you're dealing with the unbanked individuals, is the future. Anything that has to deal with transfer of information can examine blockchain. Data, information, IoT, AI can examine the use of blockchain. Anybody dealing with investment can examine the use of blockchain. But and there's also applications in some applications in other places like retail and customer service, but those are probably less needed unless you're dealing with supply chain. It's just like with anything. I think in 10 to 15 years, you're going to see blockchain everywhere, and it's going to be a standard. in a certain application or the other, and we're not even going to know about it.
Yeah, that's true. Well, one good example that I can share here is like there was a successful entrepreneur, and they experienced some security breaches in their system, and he wanted to start a new company, and since he had this incident of security breach, he said, I'm not going to use any database. I'm going to use blockchain because I want all my data to be secure. So that was like something where I said, it doesn't work like that. You may not use blockchain like that. So that was an example that I came across. Yeah.
Because in general, storing things on blockchain is very tricky, and most of the data is right now stored off blockchain. It's expensive to even maintain a database on the blockchain, and you have to add additional security measures, which again are expensive and tricky. Any point where you get off blockchain, between the on and off, are definitely points of risk. So yeah, it's also expensive because there's very few people who understand.
Yeah, true. So that's a good segue into the next question. Blockchain systems are right now not very efficient. Visa can process like thousands of transactions per second, but blockchain takes time.
Yeah.
And the technology, like the whole thing is baked into the technology, which people who are mining Bitcoin, they are sucking up the power out of the power grid, of multiple cities, multiple countries. So what do you see as the progress of blockchain? When do you think it will actually become more efficient and more, how can I say, efficient in terms of use as well as in terms of how we produce the cryptocurrencies and mine them and not suck up the world power just to create a digital currency?
Yeah, it's true. Also because the currency itself isn't being used, but it's rather being accumulated. So we're kind of producing this virtual market, right? So in terms of whether we need like large and scalable systems, I think we do, especially if we want to use this in the places where there are no banks or Visa. And fortunately, there have been systems created that can do a lot of transactions at a very rapid pace. So, and there are solutions that improve blockchain efficiency. And I've seen some applications that can facilitate, maybe not as many as Visa, but maybe as many as Visa per second. So that's one. And in terms of mining, it's true that it's definitely not green. It shouldn't be free to produce a resource, that's for sure. And Bitcoin and any crypto or currency is a resource in a way. However, because it is not used as it's supposed to be used, right? There's no transactions happening. People are just kind of trading for the sake of trading. So I do think it's a wasteful resource, because if we needed, like you had to produce coins at one point, right? When we had cash, you still have cash, you produce paper money, you produce coins, there's some cost to producing a coin, right? A nickel would usually cost a nickel. Now, what happened when people were starting to shave these coins, right? They lost value, right? So you have to have money that has actual value. A lot of people argue that that's what should happen. It should be backed by something. The dollar went off the gold standard, and the money became an IOU, kind of, a promise of a value that's very, very much based on people's belief in the system. And that's a problem. So I would look at it from that perspective rather than, okay, how can we produce crypto with less energy? There are other crypto networks and blockchains that do not have the same system of mining or use electricity. You have EOS, which is basically using another system in which you don't mine with electricity, but rather you stake, a staking model. You kind of put money in to make money, and you have other systems that are more green. At the end of the day, like you said, crypto is not blockchain. I don't think crypto systems are are perfect. There's some stable coins that were supposed to come out, like Libra, which are really interesting as a form of transactional money that we could actually use every day. I think that every large corporation like Google, Amazon, Alibaba is going to have their own stable coin for their own transactions. You're not going to need Visa to do this, and you're going to actually be able to use a lot of coins. You don't even have to have them necessarily in your wallet. As soon as you go to transact, they'll ask you, okay, do you want to exchange some money so to use this coin? Or you could also save some of those coins depending on your belief in that company itself. Now so again, you have some big companies controlling the market, as opposed to, let's say, banks. And a lot of people are saying this is dangerous because these companies have all your personal information. Well, they forget that the bank also has all their personal information. So it's basically the questions of the lesser evil. Like, what do you prefer? Yeah. Or what are you gonna gain? Yeah.
I see. Well, that's a very good way to put it. Thanks. Very well said. Now that brings us to the end of the interview. Before I let you go, can you tell us how people can reach out to you?
You can send me a postal dove right now. No, I mean, if there's no apocalypse, then you can definitely send me a Facebook message, a tweet, or a LinkedIn. I'm Yael Tamar. You can also email me, yael@solidblock.co. Check out our website. We have a lot of really interesting blogs at solidblock.co. I'm very receptive. I'll be happy to talk to anybody who's interested in learning more. I do a lot of lectures. You can just YouTube my name, Yael Tamar, and you'll get upon a lot of podcasts and blogs. I hope that's interesting to anyone, out there, because I'm trying hard to educate the ecosystem. And yes, thanks for having me. I really enjoyed it, Manuj.
Thank you so much. It was a wealth of information, and I hope the audience will look into this whole thing called blockchain and try to understand it. It's a fascinating technology. Thank you so much for being with us.
Sure. Thank you. Bye-bye.
Thanks.